Welcome back to Trade with Books, and today I am going to explain you how you can capitalize this market correction. And when a stock falls 27%, like today Indus Indian Bank share has fallen by 27%, what should be your approach to see whether this stock is now available at a value price or not? So I will take a help of this book, The Dhandho Investor must read book. You all should read if you want to work in stock market as a serious participant. This book will help you immensely, by Mohnish Pabrai. And how this Mohnish Pabrai sir, Warren Buffett sir, Vijay Kedia sir, these people actually look at the stocks for a value perspective, that I am going to explain you with the example of Indus India Bank. This is not a stock recommendation video. You will learn a lot. First, allow me to share a video with you. Listen carefully, then I am going to explain my things.
Top, if your stocks have corrected 30%, for example, from the top, and you find there is value after this 30% correction, there is a value in your stock, you can buy, but keep this in your mind that it may correct 20% further. Always prepare for this at whatever price you are buying, whether your shares have corrected 50% from the top, you should have this thought process in your mind that if I am buying, it may correct 20% again. As I told you, there were number of times that my stock had fallen 50-60% from 70% from its peak. This is what kind of carnage I have seen in this market. And even then I held on to my shares. If your stocks have corrected 30%, for example, from the top, and you find there is value after this 30% correction, there is a value in your stock, you can buy, but keep this in your mind that it may correct 20% further.
So what Vijay sir is telling is, if a stock fallen 30-40% from its peak, and if you find value in the stock, you can consider buying it, but always remember that stock can fall 20-30% more from that price levels. So whenever a good stock, whenever a big company like Nifty 50 stock, Indus India Bank, fallen from the top, if you see from the top of 1693, the stock has corrected 61%. Almost like if you have invested 1 lakh at the top, it has become 40,000 now. So now whether that is the correct time to buy the stock, because a big news has come in the stock has fallen. But you need not worry about the news. You should not track the news and all. What you can do is, you can see the fundamental of the company. If you like the fundamentals of the company, if you assess that value is there in this prices 600, price is currently, the stock price is around 655. So if you find that around 655, or if it falls further to 500 levels, 400 levels, what are the levels you will be ready to buy, or whether you like this company or not, or you will wait for some base pattern forming here. Maybe it will take 1 year, 2 year, or 3 years, you don't know. But you have to keep this such type of stocks in your watch list, because fundamentals are looking good. So how to read the fundamentals of these financial companies, and after this fall, whether this is a value buying or not, that all things we are going to learn in this video. This book says that always look for the opportunities in the market where such good companies are available at a cheap price, because of some short term reasons, because of temporary reason, market behave unreasonably, and it provides a good stocks also at a reasonable value. You will not believe. So I will just take you to the fundamental of Indus India Bank. Before that, the two things which a layman can see for a financial company. Financial company means which are in the business of lending. So like banks and NBFC. For that, assessing the value in these companies, for a layman who don't know to read the balance sheet and fundamentals, only if you follow these two things, you will be among 90% of the top people. 90% of the 1%, 90% of the top 1%. ROA, first thing is, for financial companies we should not see ROE and ROCE. We should focus more on ROA. Return on asset number should be more than 1.5%. This is historically proven that such companies are good companies if ROE is more than 1.5%. And the second thing is how you will assess that current stock price is good or it is better. Then that you have to see that if price is lesser than two times of the book value. If price is lesser than the two times of book value, what is book value? The price which is in books. If today that stock is been liquidated, this is the value, book value. Okay, in layman language you can understand like that. Now whether this current price of 655, whether the 655 is below the two times of book value, this is the question. First thing is whether this is the two times of book value, what is the book value, and whether ROA is more than 1.5%. These are the two questions for a quick analysis of any financial company like Indus India Bank. Whether this is the bottom, no, never. This is for trading, you are seeing the bottom and top. For long term investing, you are seeing only the value. This stock can fall further, but somewhere it will start making a base. There you have to see whether opportunity is there or not. And if I'll take you to the fundamentals, first thing you can see is the ROA number. So you have to go down here where the peer comparison is there. So here you can see the ROA number for all these companies. All these companies ROA number is written. So more than 1.5% is good, we are telling. For HDFC Bank it is 1.99, ICICI Bank 2.13, Kotak Mahindra Bank 2.62. It's very good. For Yes Bank it is only 0.34. That is why company has a bad situation. And Indus India Bank is comparing with HDFC Bank numbers. So number wise it is looking very decent and very good. Now the second thing is whether the book value is below or above the current price. So you can see the book value is 836, whereas the current price is 656. So current price is even one times of book value, lesser than one times of the book value. So based on that price to book value ratio, stock is available at, you can see the pros here, it is written stock is trading at 0.78 times its book value. And profit growth also company has shown in last 5 years. Okay, so if you find with your analysis some company that it is a good buy in this market correction, then you can decide whether you have to buy a small quantity here, and if it falls further you will keep on buying. One way is that. Second way is you will wait for some consolidation to happen here, and then if breakout happens, no matter how long it takes, it's not important how long it takes. The importance is how long it lasts. Remember Rakesh Jhunjhunwala ji's word. It's not important how long it takes, it's important how long it lasts. So always remember that, don't be in hurry, do your proper analysis, see some levels and put that much money only which you are ready to lose, or you have some points where you want to exit. If you are putting money for very long term, that money also you should not be using in next 2 3 years. It should not be having some plan to use that. So this was the full video. If you see in American market, Meta and all, Meta, that our Facebook, that share in 2022 correction when came this year, 2022 correction came, and the stock was down around from the top. If you see, down around 76%, almost 80% it was down. Facebook, which you are using, Instagram and Facebook, that company name is Meta, it was down from the peak of September 21 to November 22. Within a 1 year, stock fallen for 76%. But if somebody has believe in Meta that its fundamentals are good, and if he start buying at this level also, suppose at this level I will start buying, I will not catch the bottom, I will keep on buying here. When it is going up, I may buy or I will stop, but pyramiding is always a good option. So how much he would have gained? This full rally he could have enjoyed. Okay, so such good fundamental stocks, Nvidia was in news. But if you see Nvidia, whether it has not fallen, it has fallen. If you see that same market correction which came in 2021 to 22, the stock was fallen from 66%. You will say 66% fallen means stock has some problem. No, my dear friend, stock fallen from 33 rupees to 11 rupees, and from 11 it has rallied to almost 150. So from 11 it has rallied to 1300% in next 2 years. 1300%. So value investing is like that only. If you have trust in your company, you have to buy at the lower level in the bear market only. Bear market only gives you opportunity to buy good stocks at a cheap value. So that is the logic of Dhandho Investor, this book. Actually, this Mohnish Pabrai sir, Warren Buffett sir, they are buying at these levels only when they analyze the company, that fundamentals are good, company is a value buy, and then they will buy at a low levels, not at the very high levels. When here at these levels they will not buy. If that stock will correct again somewhere here and stock is again having some good fundamental, it will make a base. You see, stock was making a base and then it given a breakout. So even with a trading perspective, you can take entry here. You have the belief in the stock, you can wait for the stock to make a pattern, then you can enter and enjoy this rally. But you have to be courageous to hold this full rally also. Every dip you will come out means with 10 or 15% profit, like I have seen in my corporate friends, like who will if stock is given gain 10-15%, they will book the profit. If stock is corrected by 60-70% also, they will be sitting idle, nothing they will do. And they are doing trading, not value investing. That should not be the approach. That is a very wrong approach, because there that no chance you will make a big money, because you are taking profit less and loss you are taking big. So now you may tell that okay, anyway it has to go up now, so why to sell? It's not important that it will go up. You will buy 5 shares, 2 will give you this 13% return, 3 will die, 3 will never come up maybe again. So if you are holding to all stocks, maybe your whatever you are holding, that will not go up again. So you should be always ready to put your money in the stocks which are going up. That is called pyramiding. The stocks which are going up, you should put more and more money. So value investing is such that you have to analyze the company based on value, then you have to decide. So my disclaimer is, this is not a stock recommendation video. You have to analyze your stock, any stock in this market fall. Many of the stocks are available at very cheap value, but people will be afraid to buy. This is the problem. When the current situation is the buy signal, but people are afraid that let it fall again. It may fall, it may not, you don't know. You will never be able to buy. You again, it will fall 10%, you will think let me wait for another 10%, then one day it will again jump 20%, then you will tell already it has now gone 20%, what is the benefit to buy? So the stock will be missed for any stock. So you have to keep in mind that you have to make some system which will work for you for entire life, not like today I will do this, next day I will do that other thing. If you are value investor, you have decided that you will buy value stocks, you should buy with a system, like whether you are averaging down in 5 of the value stocks, or when they will make a base, you will wait for that and then you will buy as a trading position. So that you have to decide. Okay, all the best. I will see you in the next video. Hope you like the video. Consider subscribing.